There we go. This is kind of exciting. Look at that.
Hello. Hey, everybody. Happy Tuesday, November 25th to you all. Thank you guys so much for joining us today. If you're joining us on our website, you might notice that the look and feel is slightly different. We're trying new technology today to bring more people into the conversation, but we would love to hear from you. Go on the chat on whatever platform you're watching this in. Let us know where you're coming from. I see Eric from Belgium. Karsten from Denmark. Omar from Kuwait. Mihail from South Africa. Awesome.
Wow.
Love seeing such an international audience.
And we've got some viewers on YouTube now chiming in too. There's Vivaldo from England. Dubai.
Love that. Argentina. Romania. Hey, everybody.
Hey, Mark, Sarasota. It's our first American.
Amazing. Well, thank you guys so much for joining us today. We are happy that the technology is working. Please bear with us. We are trying to get used to it ourselves, but this is why we are here today. We are going to be doing a deep dive. And what stock are we doing a deep dive on, Stoffel?
Hey, today we are talking about MercadoLibre, which is one of the highest allocated stocks between you and I think probably if we looked at our portfolio. So we have a vested interest in this one.
100%. In fact, MercadoLibre is my largest holding, my number one holding. We'll get into why that happened in just a little bit. But we do whenever we do these sessions, we send out this to our newsletter readers, and MercadoLibre was the number one choice at 35%. Now, before we begin, I do want to give a fair warning out there to people. Some companies are easy to research. Chipotle, Lululemon, Shake Shack. Some companies are hard to research. I'm going to go ahead and say that MercadoLibre, because of its fintech component in particular, is going to be quite a difficult stock to research and analyze.
Yep. I'm not going to disagree with you there one bit.
Yep. So just keep that in mind. But we would love to know, people that are watching us, do you own this stock? Do you own MercadoLibre? Let us know in the chat if this stock is already in your portfolio. This is a stock that is in my portfolio. I have personally held this stock. I think I first bought it in 2011, somewhere around that.
I have owned this since 2013. It is most of the way that it's gotten there has been through growth mostly. It hasn't even been through huge purchases. It just keeps going up and up and up. I'm looking and I see some people have as much as 10% of their portfolio devoted to this. And I would say, based on what is coming in here, I would say at least 65% of those that are watching and have responded own some MercadoLibre. So most, but certainly not all.
Yeah, love that. Love that. Well, my name is Brian Feraldi. For those that are unfamiliar with me, I've been investing for more than 20 years. Here's my portfolio returns as of earlier of 2025 since 2011. Now, how do we outperform the market? We are firm believers that it all starts with research, knowing the companies that you invested cold. That research allows you to build conviction. That conviction enables you to have patience to hold during the tough times. And that patience and holding during the tough times, it will leads to outperformance. Now, MercadoLibre, Stoffel, has generated a 26% compound annual growth return for investors who bought at the IPO, up 7,174%. So 10 grand turned into $730,000. But it's been a little bit of a bumpy ride to get there. These are the drawdowns that you've experienced. Boy, look at 2008, 90% drop from that. So that kind of makes right now,
it makes right now look not so bad.
It makes it look like a walk in the park, just like a regular Tuesday for MercadoLibre to be down this much. So the core thing here is for us to research this stock from scratch, and that is the goal over the next roughly hour together. Now, how are we going to research this stock from scratch? We're going to use Stock Simplifier, our course/tool/system for researching stocks the easy way. It is a 7 part system, including knowing at the get to know the business growth cycle, the moat, the business risk, growth potential, and more. If you're unfamiliar with Stock Simplifier, we have a full course that explains all the details of what we're going to be talking about. We have some tools that are included, and we have the AI prompts that we're going to be using as part of this process. And we just launched a new prompt that kind of does some sentiment analysis for us.
And importantly, when we do this sentiment analysis, Brian, of course, people, if they're joining us, are probably going to ask, is this like, does it matter which LLM we use? We're going to use ChatGPT for nearly all of these, just because that's the most well known. Yep. I don't know, over the last week, maybe we should start using Gemini, because I've heard so many people talking about how great it is.
I've heard lots of great things about it too, but we will stick with ChatGPT for now, just because it is the leader. But all of these prompts should work on all of the platforms. So we start by entering MercadoLibre's ticker in there. I'm going to open up a fresh copy of fiscal.ai. I'm going to open up a fresh copy of our AI prompts that we keep in our Notion database here. And here is our price and sentiment analysis. I'm going to make a copy of this, and let's start with that. What is kind of the story about this stock right now? So I'm going to paste it in here.
And then, Brian, just so you know, because of this new format we have, it's a little bit more difficult to see. So if you can zoom in a little bit more, I think people would appreciate that. Again, we're just getting used to this right now, so hopefully this will
that better?
Yes, that is.
Okay. So this is the price and sentiment analysis prompt that I put into ChatGPT. What this is going to do is it's going to go out and kind of analyze what's been happening with the stock. Actually, I take that back. We're not going to use ChatGPT.
Yeah, so this is what I was going to get to. This is our one exception.
Yep. So far, we're going to use Grok. We're going to use
why
Grok.
are we using Grok?
Because Grok is built on the X platform, and X is much better at like real-time analysis, because it has so many tweets and stuff embedded to it. So we're going to switch to Grok for
great zooming in. Now, while that comes up, Brian, two questions that I've got. Vivaldo says, do we get a copy of the live recording? This will live on our YouTube page, so you'll be able to see it there.
Yep.
But Kyle is saying, do the prompts are they designed to use recent data? Sometimes there's a cutoff on training data.
Yep. The prompts are designed to access the most recent data. That's one of the things that's built into the prompts. So yes, it should use the most recent data. Okay. All right. So price and sentiment analysis for MercadoLibre over the last year. So what's the takeaway? It moved because, well, strong revenue growth of 30% in the most recent period, but there are foreign exchange headwinds and regional economic pressure that cause some flatness. The next earnings report is going to be in February of 2026, and the 12-month outlook is neutral. Growth in users and revenue supported upside, balance against valuation compression and Latin American risk. So analysts are bullish on this stock with very high confidence. Investors, meaning retail investors like us, we seem to be neutral on this stock, medium confidence there. And the media appears to be positive on this stock. So what's been happening? Well, 39% revenue growth as of Q3. That beat estimates for the 27th quarter in a row of 30%.
Think about that for a sec, Brian.
That's incredible.
27 quarters of 30% growth.
That's incredible. The analyst consensus is strong buy, and the average price target is $2,800. I think it's like
about 1,900 right now,
somewhere around there. What the bulls say: revenue scaled from 3 to 36 billion in 5 years, with multi-billion dollars in potential. Unique buyers were up 26% to 77 million people, despite that early e-commerce penetration, and the credit portfolio doubled at record low defaults. All right, that's what the bulls say. How about the bears? Institutional investors sold 10% of the stock last week. There's been a big pullback due to margin pressure and foreign exchange headwinds, and credit risks and competition in emerging markets weighs on the profitability.
Yeah, there's definitely some concerns about the economy in Argentina and the bailout that we're supposed to be giving them, and how that might affect their credit portfolio.
Yeah. So that is just some quick prompt analysis that we've done on the sentiment, just so you can get a sense of kind of what's happening with the business. But with that, let's go ahead and figure out which stage of the business growth cycle this company is currently in. So I'd love you to go to the chat. Let us know in the chat, which of the 6 stages of the business growth cycle do you think that MercadoLibre is currently in? So is it in the startup phase? Is it in the hypergrowth phase? Is it in the self-funding phase? Now, in Stock Simplifier, we do have a tool here that you can use where you enter in the revenue growth, the operating profit, and the buybacks, and this tool will actually pull that up for you. We also have a prompt that we can use to do that, and I'm going to make a copy of that. But what do people say in the chat, Stoffel?
What we are getting by and large is 4s. I would say 90% of them or more are 4. We got one hyper growth. But one thing, Brian, can you point out again, why would this not be hyper growth based on our kind of mindset here?
Yep. So hypergrowth is when revenue is growing extremely quickly. The company is losing money on an operating basis, but the losses are declining. So the losses are getting better, even though it's still losing money. Phase 1 is when losses are getting worse. So losses are getting worse is phase 1. Losses are getting better is phase 2. Break even is phase 3. And if the company is producing profits that are growing faster than revenue, that's phase 4.
So they have profits. So that's the main reason we wouldn't. Look, you aren't going to get any disagreement from me that they're growing fast, though, to be clear.
For sure. Well, let's put it in and see what ChatGPT says is the phase that this company is in. And this says says hypergrowth. Well,
there you go.
They both know that is incorrect. So I'm going to go ahead and X that out and do a new chat because we both know that this company is not in the hypergrowth.
Are you just going to give it another try, see what it does?
I started a new chat because it had the other prompt in there.
Oh, okay.
So I just X'd out and did a new chat.
Well, but again, look, 27 quarters in a row. Like, I get why someone would think it's hyper growth.
Yeah. So sometimes you gotta kickstart ChatGPT to get it to go. Okay. So ChatGPT says this is in phase 4 operating leverage.
There you go. Thank you.
As big as you can. So high confidence in that. So now it's very confident of that. So why is that? Operating income positive, 724 million in operating profit for the 3 months ending in September, 30% year-over-year growth. Revenue grew 39.5% in the quarter. And capital returns, no dividends or buyback discussed, but the company recently purchased 13 million of notes and authorized a small stock repurchase.
I mean, that is super small. That's just
$4 million.
Yeah.
So ChatGPT says phase 4. And because of that, it suggests using the forward price to earnings ratio and the forward price to free cash flow ratio and avoiding dividend yields and high growth models. And here's what's happening with that. And there's actually a visual framework in there. I am going to fully agree with that and say phase 4 operating leverage. Now in Stock Simplifier, after we choose the business phase analysis, that changes the key metrics, that changes the valuation numbers that we're going to look at. So I think that worked out pretty well being a phase 4.
Hey, real quick question for you, Brian. Some people have purchased Stock Simplifier in the past and they're wondering, is that sentiment prompt included?
It now is.
All right. So if you paid for it, you got access to our upgrades.
Yes, it is. Yes, it is absolutely included. More upgrades on the way, by the way. Okay. Next, what does this company do? We want to learn how does the company make money and a little bit about the business. How often do customers buy and more? So we're going to do our business analysis prompt here. I just copied that over, going to ChatGPT, pasting it in here. It should say, hey, what company are you talking about?
Or maybe it's just assuming it's going to do MercadoLibre.
Well, if it's doing it correctly, there you go.
There
it should say which company we're talking about, putting in Melly.
And this is a tough one. So Brian, as I said, this is the company that always takes me the longest to do when we do our earnings reviews because it does so many different things.
It does a bunch. Yep. Okay. What does the company do? MercadoLibre operates a combined e-commerce marketplace and fintech ecosystem serving Latin America. It offers an online marketplace, listings, buying and selling goods.
Think about eBay or Amazon.
Logistics.
Think about Amazon.
Shipping services.
Amazon.
Digital payments.
PayPal.
And credit and financing being its Mercado Pago arm.
There you go. So it's like PayPal and Amazon wrapped into one.
Yep. And I've also heard Craigslist and UPS
Yep.
wrapped into one. Yep. Okay. I would say that that's pretty good. All right. How does it make money? Revenue streams from its 2024 annual report. It's 10K. Okay. Commerce is products and services, and this is the largest segment, products and shipping and fulfillment services. Fintech is financial services and income, credit revenue, loans and credit cards, and fintech product and services. While the exact percentages breakdown isn't clearly itemized, the 2024 report notes fintech revenues reached 8.6 billion, up 24%, and commerce revenues also grew steadily. Now, what's nice is it does have the links right there to, that looks like the February 2025 report.
So
Well,
these are all in the
10K.
annual reports. It looks like it didn't go back and do the most recent quarterly.
That's okay. We can look that up in fiscal.
Yep.
Okay. Next, who are its customers? Buyers and consumers that purchase for the marketplace, sellers and merchants, small, medium, and larger size that are on the marketplace and related services, users of its fintech services, individuals and merchants using payments, credit, and digital wallets, advertisers and brands that use its marketplace and fintech ecosystem. Customers span individual consumers and businesses across Latin America. Where does it operate? Primarily in Latin America. Major companies being Brazil, Mexico, Argentina, and others. Brazil, commerce revenue grew 56% and fintech grew 32%. Mexico, 55 and 46.
Look at those growth rates.
Incredible. Argentina and other countries, but at a smaller scale. The exact percentage of overall revenue per geography isn't precisely given, but Brazil and Mexico are the top two. Is that correct?
I'm not totally sure if that's correct, because I know that Argentina is big. The funny thing about Argentina is that their inflation is so huge historically that it really it skews everything. If you go to fiscal, I do believe that they give a breakdown.
We will do that. And they're headquartered in Argentina, if memory serves. All right. Business dynamics. So these are quality aspects of the business. How frequently do customers buy? Marketplace items sold increased 27%, reflecting frequent repeat transactions from active buyers. Fintech, the credit portfolio, card usage, and payments are recurring and growing. Credit card portfolio grew 74%. So there was strong recurring usage patterns rather than one-time only costs. Okay. Can it raise prices? Well, the company operates in competitive markets. The ability to monetize via fintech services suggests pricing power in those areas. On the marketplace, logistics and shipping, cost pressure do exist. That's probably a completely fair statement. And the 10K says we can raise prices, but given it offers value-added services, it has room to increase revenue per user, but margin pressure in logistics does suggest limit.
Here, I'll add a real quick caveat. One thing that they recently rolled out, Brian, was they lowered the minimum price in Brazil to get free shipping, which to me is actually great over the long term, because that really shows the moat that they're building. Like, for instance, we've got someone on YouTube watching saying he was in Brazil in September, and the MercadoLibre vans were everywhere, ubiquitous, same as Amazon is in Europe. And then Tomas is also saying Brazil and Mexico are much bigger economies. What I wanted to say about that was that is evidence of some pricing pressure, but at the same time, and Peter's actually right, it is headquartered officially nowadays in Uruguay.
Yep.
But the thing is that the price going up is going to be more for their MercadoLibre Plus package, which is like Amazon Prime. That's where it's going to show up.
Got it. Okay. And then finally, what happens in a recession? Being an e-commerce and fintech company, it's exposed to macroeconomic and currency risk, as noted in its risk factors. In downturns, consumer spending may fall and credit portfolios may incur higher losses. On the flip side, digital commerce penetration tends to accelerate in structurally changing environments, but is still vulnerable.
That's interesting. Right. I never thought about that.
Yeah. So let's go ahead and pull up MercadoLibre in fiscal and use some of the tools that we have here, because this really helps you to visualize what's happening. So I'm clicking on financials, clicking on segments and KPIs. I will make this bigger in just a second, but we have commerce revenue. We have fintech services revenue.
Well, you know what? You just might want to just do fintech in general.
Fintech revenue?
Yeah, right there. So those are the two arms right there.
Okay, so there's the two arms. I'm going to click this button here to stack them on top of each other so that we can see that. And then I will see if I can zoom in. How's that?
That's good. Right there. Yep.
Okay. So the two businesses. So this is the commerce business. The commerce business is growing 48% compound annual growth rate since 2016, from 844 to 26.2 billion. Incredible.
Yep.
And then there's the fintech business growing 60% per year. This is now an $11.3 billion business. So right now, 2/3 of revenue is commerce, 1/3 is fintech, roughly.
And then I think they do give country by country. I could be misremembering though. Yeah, there you go.
All right. Well, if we want to see that, Brazil, 13.7. So by far the biggest.
Yeah.
Mexico is 5.7. Argentina is 5.6. Everywhere else is 1.1. So this is essentially 50% Brazil, 50% everywhere else. And by everywhere else, it's mostly Mexico and Argentina.
Yep.
Cool. And you can also see, and look at all these segments that you can get.
I mean,
gross
so
merchandising volume, the take rate. What's nice about these, Stoffel, is they neutralize any currency effects. So if you look at these, you can really get an idea of what's happening with the core business beyond just the wonky financial numbers. But all right, let's ask the question now that we know more about this business. What do you guys think? Big scale, would you say that this is a business that is confusing, a business that you understand now, or is this an exciting business? If you were to rank this for red, not interested, green, very exciting, how would people rank this company? I'm going to zoom in a little bit so they can see that a little bit better. So in Stock Simplifier, we try and keep things very simple: red, yellow, green. What do people think? Is this a red, a yellow, or a green business?
And I know, Brian, with a little bit of a delay, some of our folks on YouTube might see it a little bit later. What I'm getting is some greens, mostly greens, a couple yellows. Yeah. But I would say mostly green with a touch of yellow in there. Tariq is even saying green with a little bit of value, maybe.
Yeah. I'm going to go ahead and agree with the masses here and say, yeah,
it is confusing. To be clear, if you said red, it is confusing. I mean, there's just a lot of moving pieces.
Yeah, it's a hard business to wrap your head around, but from a pure growth perspective, I think it's a pretty darn exciting business to understand. By the way, if you are watching this, we do want to let you know we have a Black Friday mega bundle deal that we're going to be selling this week. And if you're watching this live, you can actually get access to it today, but only on this live stream. So we're going to include Stock Simplifier plus all of the AI prompts that you're going to see us use throughout this. We're going to throw in all of our 3 premium ebooks that contains 200 of my financial infographics. So about investing, about accounting, about valuation, and more. Brian, we're going to throw in all 5 of our mini courses that we have. So these are 30 minutes or less mini courses on accounting, valuation, when to sell, how to analyze a moat, and the reverse DCF. And we're going to throw in our full Valuation Explained Simply course, where we talk about the 4 valuation techniques with examples and more. All of this has a value of $1,080 if you bought this on our websites. But for Black Friday, Mr. Stoffel, $249 for all of these things together. There is a QR code that you can scan on the screen, and if you can put that in the chat, Stoffel, the link to do that, that would be great. But this is a Black Friday deal that we have.
Mr. Froley, I did put it in the chat, and it went to all the places that I'm broadcasting to. So my YouTube channel, my X, but I think maybe you might need to do it so that it goes to all of yours as well.
All right, I'll try. Again, new.
There you go. Yep, it's going out.
Okay.
Nice job.
Cool. So thank you guys. But there's a QR code if you're watching this on video or on TV or anything like that later. So we think that this is a hell of a good bargain if this kind of thing interests you. All right, moving along. Let's move on to MercadoLibre's moat. Does this company have no moat, a narrow/stable moat, or a wide or expanding moat. There are 5 moat sources: network effect, switching costs, low-cost producers, intangibles, and counter positioning. There's 3 current states that a moat could be in, and there's a moat direction. I would love for people here that are watching this to let us know in the chat, what do you think is MercadoLibre's primary moat source? Now, if you think the company has multiple moats, totally get that.
Yeah.
Which one do you think is like, this is the most important moat, or this is the moat that really is going to last if you are forced to kind of pick one? While we're waiting for some things to come in, I'm going to go ahead and take our moat analysis prompt. I'm going to copy it, and I'm going to set that up in ChatGPT.
Now there are a lot of arguments that could be made for different ones in here. So as you're showing, we're getting a lot of network effect.
Yep.
We're getting, some people talking about whether it's wide or not. Brian, I don't know about you, but I think that there is a good argument for, believe it or not, all 5 of these. Now, you might be wondering why counter positioning, but I think that when you think about who MercadoLibre is competing against, it's competing against a lot of folks in Latin America, where because they have all of these working together, they can offer things at a lower cost that the competition can't, because they can subsidize some of their newer
Sure.
offerings.
Sure, totally. So the number one answer from the chat is definitely network effect.
Absolutely.
I'm curious if ChatGPT agrees. I don't think I've ever seen it that decisive from the chat. Usually it's all over the map.
Now, and if you're wondering why would it be, the idea is that it has so many people, over nearly 80 million people go to buy things on MercadoLibre's website, much as we do with Amazon. So if you're a merchant, you know that the only way to get your product in front of 80 million eyeballs is to list it on MercadoLibre. And if you are, what did we do? We exposed.
I forced it to go a little faster, and it gave us a.
You pushed it, Brian. You can't push it.
I did.
You got to let it do its thing. Now, I will say, Tomas said switching costs are not that high for consumers, but for producers, it might be. I would just say that the way that I think about it, Brian, is with switching costs, that's more of a Mercado Pago thing. I don't switch my bank, even though it's super easy to do that. I think it's the same idea here with Mercado Pago.
Fair enough. Yeah, to your point, I haven't switched my bank in 21 years.
Yeah, same.
All right. Moat analysis, MercadoLibre, ChatGPT, when forced to do it fast, says wide moat. The moat is stable, and the sources are network effect and switching costs. MercadoLibre has developed a robust regional ecosystem in Latin America that binds customers, merchants, and fintech users through high switching costs and network effects. Revenue grew 30%, underlying the scale advantages. So one at a time, switching costs. Yes, they are present. They're narrow, but they're trending towards wide. MercadoLibre sellers and buyers become embedded in its marketplace and fintech ecosystems. If you use its payment product, Mercado Pago, you benefit from integrated payments, credit, and logistics. You have an accumulated account history, loyalty rewards, and bundled Meli Plus services, all of which raise switching costs. And fintech revenue grew 30%. GMV increased 30%. And from the letter, Meli Plus users, we think, are uniquely positioned.
So that, again, is like Amazon Prime.
Yep. Intangible assets. This is like the brand name, for example. MercadoLibre holds intangible assets in the form of a trusted regional brand across Latin America and credit gathering with Mercado Pago that gives it pricing power and advantage in risk scoring and payments, though they are not yet at the level of entrenched global brands with decades.
That's fair.
Strength. Yeah.
That's
so it's
fair.
widening. It's currently narrow, but it's widening. Network effects. Present, narrow, and widening. The marketplace model means that more buyers attract more sellers, more merchants using payments attract more consumers, and vice versa. A classic network effect. Additionally, the fintech side benefits from more users generating data, which improves risk profile, though not yet entrenched as some other titans. It's giving it a meaningful advantage. Low cost production.
See, I disagree with this.
No, this is saying does not have a real structural advantage that fits the strict definition. It's investing heavily in logistics and tech, but there's no clear metric. So explain your reasoning for why you disagree.
So I buy that there's not a clear metric. So this is one of the limitations of AI. I know that MercadoLibre is spending money hand over foot on delivery.
Okay.
And I know that they're internally, they can ship something from a warehouse to someone's front door at a lower internal cost than even Amazon, C Limited, whoever it might be. But that is not going to show up in the numbers. It's going to show up in the retention of Meli Plus people. But it's still a moat because it's so expensive to build all that out.
Yeah, and I know that it's not like America where it's like the roads are easy to do, or like it's not
exactly.
It's not easy to do this anywhere, but it's harder to do this in some places. And Latin America is probably where it's harder. Okay, finally, counter positioning. This says it's not present. This requires a business model that's difficult for incumbents to adopt, which would impair their business. While it's disruptive in Latin America, it's not positioned where incumbents are prevented from copying it with self-harm. I think it's basically saying since there's no big giant that it's taking down.
I get it. I get it.
Yeah. Okay. Primary risk factors are macro and country risk across Latin America, currency, inflation, and regulatory. The competitive landscape, Amazon and fintech startups, valuation, and Morningstar says wide moat that's stable.
Yep.
So that is what Morningstar says here. So I'm going to go to Stock Simplifier and I'm going to give this full credit. I mean, especially the expanding part.
Yeah. And the other thing I'll throw out there, so like we have someone on YouTube who says, don't consumers and merchants in South America use PayPal and Amazon? Some of them do, but the scale and the growth of Mercado Pago is something to behold. I mean, Brian, our friend Mr. Withers is in Mexico right now, and he sent us a picture of how he paid for his accommodations, and it was with Mercado Pago.
Ah, very cool. Very cool. All right. Growth potential. We know that this company has been growing like gangbusters for years, for decades.
27 straight quarters.
Incredible growth. Why should we as investors believe that that can continue? There's two ways. They can get new customers and they can get existing customers to spend more. What of these sub-drivers are going to do that? Now, if you are a fiscal user and you click on this overview button here, and you go down to growth, you can see that revenue is expected to grow 33% over the next 2 years, and over the long term, over 5 years plus, earnings per share, EPS, is expected to grow about 30% over the very long term. So that's what the numbers say, but it's really important that we understand the story of what's gonna cause that to happen. So let's put this chat prompted to AI. Give me the growth drivers for MercadoLibre so we can go section by section and see what's going to be happening there. Okay. New customer acquisition. Channel number 1, increasing sales and marketing investment. This says moderate strength. This says 2023. But I mean, it's going to be the same. So product and increasing investment in product and development, sales and marketing, and human resources to capture long-term opportunities. This is a medium confidence. New distribution, moderate. The company is building out logistics and fulfillment in Brazil, free shipping thresholds reductions, which act as a distribution expansion tool. Our investments are delivering results across our ecosystem. Geographic market expansion, strong. Mexico increase was up. Fintech was up. So with Brazil and Mexico strong. So new markets, both in markets they already compete in and potentially even new geographies. Acquisitions.
Agree with that.
This is not a growth avenue for the company to make acquisitions. Okay, so that's getting new customers. Let's talk about getting money from the customers that already exist. Pricing power. Moderate, the company mentions higher mix of premium take transactions as a growth factor. So it can increase prices a little bit. New products and new services. strong.
Yeah, I mean, credit card portfolio is growing like gangbusters.
The growth in fintech services is especially exciting. The credit portfolio was up huge, driven by payment volume. So this is going to be the big one for the company. And then finally, getting customers to stick around longer. So unique buyers are growing in Brazil, up 30%. Just incredible.
It's insane.
So what are the biggest growth drivers? It's going to be geographic and market expansion and new products and services.
Agreed.
Next is going to be pricing power and just keeping more of what they got.
They're going to wait to flex those pricing power muscles,
Yep.
as they should.
And then finally, acquisitions is not a big one. And then marketing and sales investment. I think I'm going to disagree with the marketing and sales one. I think that if they do advertise more in the markets that they're in and build out the infrastructure, I think that I would actually rank that, I think, up here in primary drivers.
I think it goes hand in hand with their market expansion, but I agree with you.
Yeah. So anyway, this is ChatGPT's guess at that. And there's a nice color coding thing. But the bigger question here is, what do you guys think in the chat? Long-term growth potential. Is this low, negative, or red? Is this good? Is the growth potential here good, or is it great? Is this green growth potential moving forward? What are the, what's
so
the
let us know, red, yellow, green.
Yep. Or good, bad, whatever. So Tom says green. Tom Robinson says green. There we go.
Federico, green.
Yep. Green. You
got lots of green on this one.
I'm sensing a pattern. Yeah. I
would agree. I think it's really hard for people who don't live in the area. And I don't live in any of those three countries, but I do spend time in Central America. I don't think they understand how much penetration there still is left to go too.
Yep. I mean, the chart that I've always seen is just what is the internet penetration rates down in Latin America. That's why I mentioned before, increasing sales and marketing expense should be a big one. I'm going to fully agree here. I think that the opportunity here is great. Okay. Friendly reminder for everybody watching. If you want access to our Black Friday mega bundle, which includes Stock Simplifier, all of our ebooks, all of our mini courses, and our full valuation course, we will put a link in the chat for that you can take advantage of that deal early. All right. Up next, key metric analysis. Now, at the beginning of this stream, Brian, we said that this is a hard company to analyze.
Yep.
And when companies are hard, these key metrics don't always align perfectly with what we're seeing. Moreover, ChatGPT does struggle a little bit with these numbers here. But these are the key metrics that we're going to be looking at to analyze a phase 4 company. So I have the key metrics thing up here. I'm going to go to ChatGPT and we're going to put it in there. This is the one that ChatGPT, because we're asking it for math, does struggle with the most. So we'll see what the reports are, and we will back. Oh yeah, what phase it's in? It's phase 4.
Oh, you got it. Did you tell what company?
MercadoLibre. Yes.
Okay. All right.
Yeah. And it asked me, okay, what phase are we analyzing?
Yeah. Well, it does this. This is why double checking with Fiscal AI is so important.
Double checking is super important here. Okay. But let's see what it says. Okay. Revenue on a 3-year compound annual growth rate. This says green. The threshold is 20%, and we want it to be there. So right here, revenue on a 3-year basis is 39%. So we know that one is going to be green. Yeah. Operating margin. We want to see that operating margin is positive and it's rising. So this says 11.4%.
I've got 12, so that's pretty close.
Yep. If you go right here to margins, it does say 12%. And if we look at that on a chart, we could see the direction there if it was rising or falling. Okay, next, free cash flow margin. What is the free cash flow margin? And is this number positive and or rising? Well, right there, look at this free cash flow margin, Brian.
Yeah, so here's the thing. Here's the thing about MercadoLibre. They are becoming a financial company as well, which means, if you think about it, that they are taking on deposits, but also they have a credit portfolio. And so they're offering some credit. And when these things are happening, then they're going to, especially when they're taking on deposits, it's going to look like free cash flow is growing by a bunch, but really it's misleading.
Yep.
The better that Mercado Pago does, the better that free cash flow is going to look. But it's not a fault of theirs, but it is a mirage, to be clear.
Yes. But just for the sake of argument here, this is technically the company's free cash flow margin. So it was kind of in the 20s, as low as 5, and recently in the 30s. But yeah, I sent out an email about this.
Yeah,
Again,
I saw that.
MercadoLibre, because it's a pseudo bank and it does do lending, that can do wonky things to your free cash flow. So I don't think that free cash flow, the pure metric of free cash flow, is the right metric to use on this business, even though that's what we say in just the simplified version of Stock Simplifier. Anyway, let's keep going with that. Either way, we both agree this number is positive.
Yep.
Yeah, so it's getting okay. Earnings versus estimates. Recent quarter net income beat revenue, but margin pressure, and it's beat earnings in the last 4 quarters. Let's go ahead and check that out. So if we go to quarterly and we go to earnings per share, let's see. The A's are actual. So actual. Let's see. So the actual is 832.
So miss, beat,
miss. Yeah. So
that's not surprising, because this company also, for what it's worth, they don't give guidance. So there's no there's no runway that they offer for analysts.
Yep. So again, on Stock Simplifier, that would be mixed at best. But I'm actually going to say for MercadoLibre, because of the factors that we just talked about, I'm actually personally going to give them pay more attention to revenue than earnings. So if we look at revenue, we see estimate 7.2, 7.4, 6.6, 7.8, beat 5.5, 5.9, beat 5.9, 6.0, beat 5.3, and 5.3, beat. So revenue picture was mixed. Excuse me, the earnings picture was mixed. Revenue was consistently consistent beat.
Brian, sorry, let's do this last one and then there's a question.
There's return on invested capital. And if we go to overview, now companies that are in this stage are not fully optimized for return on invested capital, so you do need to keep that in mind. But Fiscal says 29% return on.
That's on capital employed.
Yeah, return on invested capital 11.3% for this business over the last 5 years. So that number is very positive.
So real quick, Naran asks, because we were talking about free cash flow, he said, if you can't use free cash flow, what can you use to assess its real growth? So I would say you can use operating profits, but I believe your email that you sent out talked about how they even give an adjusted free cash flow.
Yes, they do give an adjusted free cash flow number right in the management team. You know, I know that they don't have it on there yet. Fiscal is launching like an adjusted segment so that you can see the adjusted numbers. I guess they don't have it yet on every company. But yeah, you can use adjusted free cash flow, or you just use earnings.
Yeah.
Or you can use EBIT/operating profit, or you could use gross profit. So because of the nature of the business and how fluid its currency movements are and inflation, everything like that, kind of doing look through to get a better measure of the actual business has always been something that I've said smart investors in this company have done.
Yep.
Yeah. Okay. All right. So pretty good overall. I would say for the large part here, it scores quite well on these metrics. Again, with the caveat that these metrics are not perfect given the complexities of MercadoLibre's business. Do you ever see any questions that we see?
No, I mostly just people giving their votes here. But the big one, what program are you using? We're using Fiscal AI.
Yep, Fiscal.ai, who, by the way, I know for a fact is going to have a 30% off
30%
sale on Black Friday. So if you use Fiscal.ai/Brian, you can get the premium plan.
Well, a couple back and forth. So I like this one. Is credit risk a massive concern? What I would say is I wouldn't say it's a massive concern. And what you can do is check out their non-performing loans between 15 and 90 days past due. To do that, you have to go to their investor relations page because that's not broken out in Fiscal AI. But what I will say is it's not a huge concern, but it's definitely, if there's one thing that could bring the company down, that is it.
There you go. Well, speaking of concerns and things we should be worried about, now it's time for the risk section. We have simplified all risk that you take on as an investor to one risk. And I actually really, really like the way that we do this. All risk boils down to execution risk. Can the company deliver the results that the market is expecting of it? What are the things that will prevent the company from doing that? It's purely execution risk. Now, within execution risk, there are some sub risks that dramatically increase or decrease the chances of the company being able to do that. Concentration risk, disruption risk, outside forces risk, and competition risk. So let's take a look at some of the risks here and see what ChatGPT picks up. Because credit risk, for example, is going to be a sub risk here. All right, I'm curious to see if it brings up default risk on the credit portfolio. Okay, overall riskiness here, ChatGPT says medium. Outside forces risk and disruption risk are the biggest. Okay, strong ecosystem integration across commerce and fintech give diversified revenue streams and regional dominance. So concentration risk, yellow.
Let's see why.
Okay, limited disclosures of any single company of more than 20% of revenue. The company states it has a diversified merchant and buyer base.
Oh, it's giving us regional. That's why it's saying Brazil.
The company is heavily focused on Brazil and Mexico, which contribute the majority of revenue, indicating geographic concentration risk.
I'm not too concerned about that.
Me either. To me, I'm going to say that that's not a risk, but at least it found, wow, a lot of sales in Brazil. Yeah, we agree. Okay. Disruption risk is red.
Well, let's see.
A company acknowledges risk factors related to technological change and evolving consumer behavior that could render its platform less competitive. Competitive pressure from global entrants like Amazon and local fintech challengers, as well as logistic delivery innovations, could disrupt a business model like free shipping and programs reducing margins.
The thing is nobody can afford to offer that. Even Amazon can't afford to offer that.
Yeah, I don't view that as disruption risk. I view that as competition risk. Disruption risk is some new technology comes along that makes its fintech services obsolete, or it makes its payment platform obsolete. I'm going to go ahead and say ChatGPT got that one wrong.
Yeah, I would say like 3D printing of products so they don't need to be sent. That would be disruption.
That would be a disruption risk. I don't view. I would view these as green. This company is the disruptor. It's not at risk of being disrupted.
Yeah, we're on the same page on this one.
Outside forces, red.
Now, I actually agree. This has always been the case, but I think it's a big deal.
This is the risk. This is a major risk. Significant exposure to foreign currency fluctuations, inflation, and economic instability in Latin America, especially Argentina, is explicitly disclosed. There's tax and regulatory risk. Recent tax claims in Brazil and Mexico. The company wrote provisions of $500 million related to a Brazilian tax case. Didn't Brazil recently take down Meta's net income?
I'm not sure, but I want to throw something in there because I think this is right. If there's one that's going to be red, this is the one that's red. At the same time, Brian, if you go back 10 years ago, okay, MercadoLibre only reported 3 countries, but Mexico wasn't one of those. It was Brazil, Argentina. Do you know what number 3 was?
Uruguay?
Venezuela. Venezuela was one of the biggest ones. These days, I mean, they've almost completely pulled out of the country. My point being that this is nothing new for them.
Nothing new. Yep. Finally, competition risk. The company holds a leading position in Latin America with strong marketplace and fintech ecosystems, which serves some competitive shield. But competitive threats are real. Aggressive discounting by competitors and margin pressure from logistics costs and incentive programs. but they are continuing to invest in their own ecosystem, logistics, and fintech. So
Yep.
concentration is yellow. I view that as a green.
Disagree.
Disruption, I view that as a green. I don't view that as a problem. Outside forces is
That's
definitely a red. Definitely a red. And competition is definitely a yellow, with the likes of like C Limited making some pretty big strides in there. Not to say anything on the fintech side. There's like Nubank, that's a pretty big competitor in the space. So outside forces amplifies disruption risk. Unstable economic environments, changes can acceleration and competition. The concentration help defensive positions, diversified customer base and geographies, but the company is still heavily dependent on Latin America. It also did not bring up its credit portfolio.
So it just goes to show you, ChatGPT can do a lot of things, but it can't do everything.
No. Again, this is a complex business.
Yeah.
So it's 1/3 bank, it's 2/3 eBay, 1/3 bank, and that 1/3 bank, because of it's loaning out money, the default rates are going to be something to watch. Like that to me is going to be
90 days past due. Keep your eyes laser focused on that.
Yeah. But if I was to go here and say, okay, how risky is this business? I'm personally comfortable with saying yellow.
That's what I would say as well.
Yeah.
And I do think that most of the alpha that's come from this for you and I over the years has been because the market has long said it's red, because the fundamentals have been phenomenal always. Like that, it's not like it's all of a sudden started growing really fast. I think the difference is in 2011 and 2013, we both viewed it as yellow, whereas everybody else viewed it as red.
And don't forget, this is execution risk. What the odds of the company continuing to execute? Everything we just highlighted, with the exception of the increase in competition, I would say has always been there, and they have so far navigated the extreme challenges brilliantly, just brilliantly.
I want to answer something real quick that Tariq brought up. It's the most recent comment. It says, I don't understand why we don't see Amazon as a competitive risk. I think that they are a competitive risk, to be very, very, very clear. The thing is that in order for Amazon to really eat away, think about what they need to do. They need to pull all of the merchants and all of the people who've started using Mercado Pago out of that ecosystem, and they need to go in and build a ton of fulfillment centers, and those things take time and are super expensive. And I just think Amazon has other places, NVIDIA chips, that they're going to want to spend their time rather than this.
Fair enough. Yeah, this is a gnat compared to them, but never trifle with them. Friendly reminder, if you're watching us and you want access to Stock Simplifier, all of our ebooks, which contain 200 of my infographics, all 5 of our mini courses, plus our full Valuation Explained Simply course, we are having a Black Friday mega bundle sale, $249 for all of that combined. Okay, valuation. Now, Brian, we are going to follow the valuation metrics that have been laid out in Stock Simplifier. And since this company is phase 4, the valuation metrics to look at are the forward price to earnings ratio and the forward price to free cash flow ratio. So we will look at those with the mega caveat that this company's price to free cash flow is not a super reliable or good metric given the credit portfolio of the company.
Right. Exactly.
All right, MercadoLibre. So if we go to financials, it's back above 2,000 again.
There you go.
If we go to ratios, so these are the trailing valuation numbers. We don't want the trailing numbers. We want the forward numbers because this is a growth company. We want the forward price to earnings ratio. Look at the variability we get in this number here. So this is obviously going to make our chart irrelevant. This is going to make it irrelevant. So I'm going to go down and let's just say maybe from 2022.
Sure.
From 2022 on, that's a time period that is of value to us. I zoom out once just so you can get it all on the screen. And here's what we see for the chart. Now I'm going to click this here to
So
say
it's at 40 times for those that might not be able to read it. 40 times forward earnings.
40 times forward earnings. This number has been as low as 33, as high as 71, and the median number here is about 40, 49. Remember, this is the price divided by next year's earnings estimate. Next year's earnings estimate.
I don't think anyone would argue that 40 is cheap.
No.
Like on an absolute basis ever. It is about 20% under its average over the last couple of years.
Everything is relative.
Yeah.
Everything is relative compared to what? And also, this company is expected to grow 30% per year over the long term.
Don't forget that.
So you do have to factor that in mind. Okay, so that's the forward PE. Now let's look at the forward price to free cash flow with the caveat that this number is dramatically, that's free cash flow yield, forward price to free cash flow, P to FCF. Okay, let's do that same thing there. High, medium, low. And so the median number here is 19 times price to free cash flow, as high, forward free cash flow, as high as 40, as cheap as 10, currently 12. So the average here is about 20, although it's never changes.
The number just means a lot less.
An average. But going off of those two numbers, I would love to know your thoughts in the chat. Let us know in the chat. Is this a green company? Is it expensive? Excuse me. Is it cheap? Green? Is it yellow? Fairly valued? Or is it red? Overvalued today based on its historic multiples? So green, cheap; yellow, fair; red, overvalued. While those come in. Okay.
Karsten says green.
Green.
Got a yellow in there from Neil.
Green. Yeah.
Yellow from Jim and Stelly. There we go. Look at him. We got people from all over chiming in on X, on YouTube, in our room right here.
I am truly just happy that the technology works.
I am too. This is great.
Yeah, totally agree.
Well, hey, where do you land, Brian?
I'm going with green.
Yeah.
If you force me to choose a metric, I would probably go with something else.
What about like gross profit? Would you use that?
Well, gross profit is a little tricky too because of the fintech investment.
So
but
what would you use?
You know, we're here. Let's take a look at price to gross profit since we're here. So this is price to gross profit.
Now
so
you could probably pull that back for what it's worth.
Yes, you can.
You could pull it much further back.
Yeah. So this is price for gross profit of the business.
Although it does seem like starting in July 22 might be a good idea.
Yeah, I would say that's probably accurate. Now, this is not revenue. This is the number right below revenue after accounting for cost of goods sold. Looks like this number has averaged about 9.5. Yeah, 9.5 at currently 7. Another one might be EV to EBIT. I don't know. Oh, actually, I'm trying to think operating cash flow, if that would be useful. Well, let's take a look at EV to EBIT.
So let's explain what that is real quick.
This is the enterprise value of the company, the total value, including the cash and the debt, divided by its EBIT, earnings before interest and taxes. So it does not account for interest payments and its tax payments. It kind of helps to neutralize those, but it does have its depreciation and amortization. This is a metric that a lot of professional investors do like to use. If we zoom out, is it crazy? Yeah, it gets crazy.
Yeah, it gets crazy.
So 2022. So 34 times EV to EBIT, and this number here is averaging 40. So on a multiple metric, I think at the worst, it's fairly valued, and at the best, it's undervalued. Okay. With all of that in place, final question. Are you interested? Let us know. Yes, this could be yes, green, super interested. Great business, great moat, great growth, great valuation. That's obviously best of all worlds, right? Yellow, which means I like the business, but I don't like the valuation, or I'm waiting for some risk to pass, something like that. Red is hell no. This is in my discard pile. It's in my too hard pile, or more.
We
So
got a lot of greens, a lot of yeses.
Yep.
I'm assuming yes is in response to your question. Is this a good idea? I mean, Brian Jackson says it's a no-brainer. Look at this. Joe said, I'd add, if it wasn't already, an 18% allocation.
Okay. Green. Yes. Have a position. Yes. Tariq says yellow. Yeah. Green it. Bought more last week. So people here for confirmation bias.
Yeah.
I love that.
Looks like Martin learned something new here.
Yeah. A lot of people saying green. It looks good. I should have bought it instead of Meta. As a shareholder of both Meta and MercadoLibre, I personally don't think you made a bad choice. But I think with this company, Stoffel, as long as you go in with eyes wide open on the risks that you are taking on credit risk with this company. You're taking on country risk with this country.
Those are the big two.
You're taking on new competition risk.
And that's number three.
With this company. Those are real risks. But this company has a almost 20-year history of taking risks and growing like gangbusters, regardless of the way.
Now, there was, so Brian, I apologize because this is like way up there, but I thought it was a really good, if you go up at 1152, Tomas, sorry, for you, it's probably 1252. Tomas Cabrero. Yes. Let's read that one off.
My wife worked for Amazon planning expansion in Brazil and Mexico, and they struggled to navigate the local cultures and macro conditions. Dealing with unions, for example, in Latin America can be complex. And that's why Amazon didn't even attempt entering Argentina. So what you're saying, Tomas, is there are barriers to entry, legal barriers to entry for even massive incumbents. A few years back, Stoffel, C Limited entered this market.
And they are still in Brazil.
Oh, didn't they pull back? And then
they are still in Brazil, but it's working on bringing some very low cost products in.
Yeah.
I'm a C Limited investor and I don't love it, but that is what it is.
Yeah. Great. Yeah. They have to split 10-1. I'm sure they could. If it wasn't, here's a question from Brian. Because you have a great name, we're going to put you on screen.
Yep.
If you weren't a current owner, would you make this an anchor position? So 2 questions there. What's an anchor position? And would you buy it if you didn't own it?
So an anchor position is a stock that has a very wide moat where it's more about having limited downside than unlimited upside. And I'm willing to devote a whole bunch of money to it. For me, yeah, I would build into this. Now, I wouldn't go all at once just because I don't ever think that that's prudent. But yes, this shares the characteristics of an anchor position, which is why for me, it is an anchor position.
Awesome. Well, as a friendly reminder, the tool we just used to research this company was Stock Simplifier. If you have questions about any of the metrics that we talked about or any of the reasons or rationale for why we did what we did, we have a full course that comes with Stock Simplifier. You get the tools that we have that helps you figure out which phase of the business growth cycle the company is in. You get access to all of the AI prompts. And because it is Black Friday week, we are offering Stock Simplifier plus the AI prompts. All 3 of our premium ebooks. If you know those graphics I share online related to valuation, related to accounting, related to investing, all of those are included. 5 mini course bundles, our intro to accounting, our intro to valuation, our when to sell mini course, our moat mastery mini course, and our reverse DCF mini course, as well as our full Valuation Explained Simply course that talks about the 4 valuation techniques, details on analysis. Brian, we used to sell Valuation Explained Simply for $800.
Yeah, we did. It's true. And we had a lot of people attend that.
Now that's basically bundled in to this deal. So $249 for all of these together. There is a link. I'm going to put a link in the chat there. If you could share those on the platforms that we are streaming on, that would be really really fantastic. So we hope that you guys take advantage of that Black Friday deal that we have going on that week. Now, with that in mind, we hope that you guys enjoy these deep dive sessions. I know that I do. I know that Stoffel does, but we want to know from you, what stocks do you want us to research next? Please throw any stocks that you have that are interesting you on in the chat. We will make note of them. We will put them out for voting amongst our newsletter readers, and we do a poll whenever we do these so that people can choose whatever stock interests them, and that is the stock that we will research next. The next live stream that we're going to be doing, we are taking next week off. We will be back on Tuesday, December 9th at 12 o'clock. Look forward to seeing us live right here on wherever you're streaming this on, Tuesdays at 12 o'clock Eastern time. Sometimes we're going to do deep dives into individual stocks like we did today. Sometimes we're going to do portfolio or valuation lessons. Brian, the last time we did this, the number one request that we got was for you to do a section on how to do a reverse DCF, the optimized reverse DCF.
And so that's what we're going to do when the next time comes up, because people were super excited about that. And we've got a ton of questions or suggestions coming in.
I have great news from Mahendra. We already did Microsoft like a month ago. It is live on
same with
my
Meta.
YouTube channel. What?
We've done Meta and Google as well.
We've done the trade desk.
Although Google has changed quite a bit.
Yeah, we got questions for Tariq. We already did the trade desk. That's like 2 weeks old. I see Fiverr, Twist, PayPal, Inod, Old Dominion Freight Line. That might be a great one. I think that's Constellation.
That's Constellation software. Yep.
Software.
I see Toast,
JP
Chipotle.
Morgan. Oh, Shopify. That's a great one. Spotify. That's a great one. Naren, we just did Google a few weeks ago. So many of these, any of the Mag 7, we just did. And actually, I should point this out. Perhaps it's worth doing some big popular companies like every 6 months or every 3 months or something like that. I'm happy to re-talk about companies we've already done. Toast. I love Toast as an idea. Chipotle, Axon. I love that as an idea. Oh, Fiserv. Man, they've been absolutely obliterated. Pins, SoFi. Yeah, these are all great suggestions. We will keep track of the ones that you guys have, and we will put them out for voting. I try and change those up every week so that we get a good mix. On there. As for the Black Friday deal, we have some other. We had some other questions about the Black Friday deal.
And I put in a couple people just had questions to send something to our email address to figure it out.
Yep. If you've already bought Valuation Explained Simply and the Buffett method, if I have all these, will you guys do a Black Friday sale for me? If you're already a customer of ours or you've already purchased something, send us emails, brian@longtermmindset.co. We are fairly responsive to questions that we get like that. So with that, no matter where you are in the world, it's Thanksgiving week in the United States. I am personally extremely thankful that I get to spend time with Mr. Stoffel and that people actually watch what the heck
I can't believe it. Every time that people show up, it's really just I'm just happy to be here.
We're just so thankful that you guys are here. I wish your portfolio is nothing but sunshine and roses ahead. Although I have a feeling that 2026 is going to be a rocky year for the markets. That's just my feeling. But we love doing these. We really hope that you join us on Tuesdays at 12 o'clock moving forward. Thank you so much for your time and attention. Brian,
everyone.
Out.